Welcome to The Explainer. Today, we're going to demystify the world of LIC life insurance, breaking down the key info from Deep LIC services. We'll look at how it works, what your options are, and, what it all really means for your financial plan. All right, let's jump right in.
So the source material from Deep LIC Services kicks things off with this really powerful idea, something that gets right to the heart of their philosophy. Jivan ki suraksha, jivan ke saath, or jivan ka vikas. And what that really translates to is this concept of having security during your life, but also experiencing progress and growth with your life. It's a huge idea, right? And it sets the stage for everything we're about to cover. We're looking at insurance not just as a safety net for what happens later, but as a tool you can use for your financial journey, starting today.
Okay, so first things first, let's nail down this fundamental concept of what insurance is. The source material calls it a suraksha kavach, which is basically a shield of security. Think of it as your financial armor, your first line of defense when life throws those inevitable curveballs your way.
All right, so if insurance is this financial shield, what makes it so critical? I mean, why is it something that experts say is essential? What does it actually do for you and your family day in and day out?
Well, let's get right into those core benefits, because the why behind getting an insurance policy, it's about so much more than just one single payout at the end.
Just look at the range of advantages here. It's not just about protection from unexpected stuff like accidents or illness. It's also about achieving what the source calls man ki shanti, that real peace of mind. And check this out. It's designed with two big outcomes in mind. There's a death benefit if you're not around to protect your family's finances, but there's also a maturity benefit for you if you outlive the policy term. Then you add in things like being able to take a loan against it and getting tax benefits, and suddenly you see, wow, this isn't just a policy. It's a seriously versatile financial tool.
So now that we know the why, let's get into the what. We're going to take a quick tour of three main types of plans that the source material highlights. This is where we'll see how all those benefits actually come to life.
First up, we've got the endowment plan. The easiest way to think about this one is like a two-in-one deal. It's part life insurance, part disciplined savings plan. And here's the key part. It is not linked to the stock market. That means your returns are designed to be way more stable and predictable.
A classic example from the source is LIC Jeevan Labh. Now look closely at the table. See the difference between the policy term and the premium term? This is a really cool feature. You might only pay premiums for, say, 10 or 16 years, but your life insurance coverage continues for the full term, maybe 25 years. This whole limited premium thing is a huge draw for a lot of people.
Okay, next up, we have a whole different ballgame. The Unit-Linked Insurance Plan, or ULIP. Now, just like an endowment plan, it's a mix of insurance and investment. But, and this is a big but, your money is invested directly in the stock market. And what does that mean? It means you've got the potential for much higher returns, but it also comes with higher risk.
The LIC Index Plus plan is a perfect example of a ULIP. You can see right there in the details, the risk profile is listed as very high. Your returns are directly tied to how well certain market index funds perform. On the flip side, it also gives you flexibility, like being able to do partial withdrawals after the first few years.
And this right here brings us to the fundamental choice, the real trade-off you have to think about. On one hand, you have an endowment plan like Jeevan Labh, which offers predictable, stable savings. On the other hand, you have a ULIP like Index Plus, offering the potential for bigger returns, but you have to be okay with market risks. So which one's for you? Honestly, it boils down to one thing, your own personal appetite for risk. All right, our third category is the whole life plan, and the name really says it all. This plan is designed to give you insurance coverage for your entire life, usually right up until you're 100 years old. This is the kind of plan people often choose when they're thinking about leaving a financial legacy for their family.
Jivan Umang is a fantastic illustration of a whole life plan. What's so unique about this one is that after you finish paying all your premiums, the plan actually starts paying you back with annual survival benefits. So it's like creating a regular income stream for yourself in your later years, while still knowing there's a lump sum payout for your family at the very end. Pretty interesting, right?
And to give you a really solid, concrete example of how some of these non-linked plans build guaranteed value, the source points to the Bima Jyoti plan.
With this policy, for every single 1,000 rupees of your sum assured, a guaranteed 50 rupees is added on year after year. It's a perfect, simple illustration of a clear, quantifiable benefit you can count on.
Okay, so we've looked at endowment plans, ULIPs, and whole life plans. That's a lot of options. So how in the world do you actually go about choosing the right one for you? And what happens after you've bought it? Well, the source material recommends a really simple, clear 3-step process. Step 1, assess your own needs. Be honest about your age, your income, your lifestyle. Where are you right now? Step 2, compare the different plans based on that personal assessment. And step 3, which is super important, talk to a qualified advisor. They're the ones who can help you navigate all the fine print and find the plan that perfectly matches your specific goals.
And please remember, your policy isn't just some document you buy and then file away forever. It's an active financial tool. As the source highlights, you can and should manage it over time, whether that means updating your bank details, reviving a policy that's lapsed, or even taking out a loan against it if you're ever in a real financial pinch. So far, we've covered insurance from the perspective of a customer, right? But the source material also gives us a fascinating look from the inside out, exploring the idea of becoming an agent yourself. For anyone who might be interested, it turns out the path of an insurance agent has its own unique set of benefits. You're looking at the potential for a really good income, a flexible work schedule. You're essentially building your own business. And on top of that, you're actively helping other people secure their financial futures. It's a pretty compelling mix. So, when you step back and look at the whole picture, what this all really shows is that insurance is an incredibly powerful and versatile tool to have in your financial toolkit. It doesn't matter if your goal is just steady savings, or if you're aiming for market-linked growth, or if you want lifelong security for your family, there's a structured path forward. It's all about moving beyond just protection and toward proactively building real financial resilience for yourself. So we'll leave you with this one question to think about. After everything we've talked about today, is your financial shield in place? Thanks for joining us on The Explainer.